From the floor of the CME Group, this is Danny Riley on today's pre-noon update. And the name of this video is going to be called the Global S&P Squeeze Job. The high of the day in the S&P came in at 2097 even just now. The low came in at 2086 even after the open. And last, we're 2097 even. We're up 24 and a half handles. Now, we're up 24 and a half handles today. But if you go back from Friday's Globex low, we're actually up 42 handles. And if you go back to Friday morning's opening, we're actually up 35 handles. So either way, it's been a big smash and grab on the upside. But that also goes back to speak about one of MrTopStep's trading rules, that it takes days and weeks to knock the S&P down and only one to bring it back. Now, we're looking at a much slower week in terms of economic reports and earnings. But tomorrow we have, we have the NFIB Small Business Optimism Index. We have the productivity and cost number. We have the Redbook. We have the wholesale trade number, and we have a 3-year note auction. Now, look, I think this is the same old, you guys. There's always going to be a reason to sell. And when there's an accumulation of reasons to sell, the S&P acts in kind. It went down. The Dow sold off for 7 days in a row, the first time that we've had a sell-off like that since October of 2011. Now, here's where I go with this. When everybody starts to sell, and these margin calls come out, whether it be for stocks, options, or futures, or whatever it is, futures on option, they either have to come up with the money, or they have to roll those positions lower, or they have to liquidate. On Thursday and Friday, a lot of those margin calls went out, and I believe what happens at that stage is something called capitulation. So late in the day, after everybody was squeezed out, the S&P rallied, and then it rallied into Globex, and then it rallied this morning. And that brings us back to one of our old trading rules, that it takes days and weeks to knock the S&P down and only one to bring it back. Now, my view of this is it's the same thing over and over. It's the same picture. A bunch of bad news comes out, everybody gets short, and then they get run over. And I gotta be honest, I was a little bit concerned last week, but when the S&P rallied on Friday like it did, we rallied like 10 handles, started going up in Globex. We all know that there's a lot of lows made in Globex, and therefore when the S&P's opened higher and then started going higher, I knew right off the bat that this was just another one of those bumps in the road for the shorts. But that said, you know what, or the bulls, I should say. But at the end of the day, you know what? When I was looking over all the news stories and the TV over the weekend, I didn't hear one story come out saying, hey, everything's going to be okay, the markets are going back up, it's just this same old crap with the back and fill price action, and don't worry about it. No, everybody was gloom and doom. I didn't find one article that came out saying anything positive about the markets, yet the Dow is up over 212 points right now. So, look, I'm going to finish it off by talking about a couple of little things. One, we're going into the July expiration, and I want you to pay attention to this. If you haven't noticed, over the last couple of months or the last couple of quarters, I've talked about how I think that we're going to get past the expiration and then we'll go down into the end of the month. That's exactly the way this pattern has worked. Therefore, I think we are going to rally. I think we're going to rally into the expiration, and then I think we're going to go down into the end of August. And then we're going to go into that spooky September and October. And I want to remind everybody that October is, while it's known for its crashes, it's also known as the bear killer. And you know what? I get a feeling here that we're just back in the same wishy-wash, wash-on, wash-off trade, and that we're really not going anywhere. And I know I hate to say that. I'd like to say that we're going to have some gigantic move one way or the other, but I just don't think it's in the cards. There's quantitative easing going on in Europe. Sure, money may be moving from the U.S. to Europe, but at the end of the day, zero rates in the U.S. markets, there's nowhere else to go but stocks. And I'm going to leave it like this. I still think the S&P is going to be up toward 2,200 at year end. I'm not changing my point. That said, I want to remind everybody, if you're not getting the videos, go to the website and get signed up for the opening print. If you can't find it, hit me up on the YouTube channel and I'll put a link in, or I'll make sure you can get on it. I'm going to leave it like that. We'll try to come back on the close. If not, we'll see you tomorrow on the opening print.